Hello and welcome. It's the completion of the 24th day of June 2019. My name is Derek. Welcome to the Money Charts channel. Like always, all bets, trades of the like, well, that's within each's own risk and their own reward. Like always, all bets, trades of the like, well, that's within each's own risk and their own reward. For myself, risk reward management is always job number one, which is what I did a lot of today as far as my portfolio is concerned. I updated one of my spreadsheets today, which will definitely help me allocate towards such. Yeah, now let's get on to Bitcoin. So, okay, here we are. Another situation on Fibonacci resistance, having to evaluate, analyze how it's doing, and it's not resisting it. We've had several days now holding and staying above while grinding its way to the upside with only 25 minutes to go in the day. The markets are technically up on Coinbase, $171. After yesterday it was up 166. The day before was up 430. So yeah, another update is a high probability as price action is in at the 11. Now what does this mean for, I mean, long term everything's all live still, well overextended, it can retrace back at any given time, but given a live bull market where buyers are in full control of the market, as we can see in the weekly chart that until they stop, it's obviously poised to keep going higher. Does the short term state that anything like this can happen? Well, amongst the 4 hour term, price action topping in here at this point in here, and it's been close to around that of a dozen periods or a dozen 1/6 hours or a quarter hour, yeah, 1/6 days. And price action got a chance to get going in here in the middle part of this, but ultimately didn't do so, and the failed breakout corrected, and it's still far correcting. Right now, what we're seeing is continuous strength amongst the 18 average of highs. There's only 22 minutes, 54 seconds to play in this long-standing period. It does show signs as if it's even trying to break out, but even as it is, a 4 just hanging in there well away from the lows. In fact, it hasn't even touched the 18 lows since breaking out in here, meaning this price correction has not been deep enough or long enough in price to be able to adequate such, and it's still not even close. Again, if anything, it looks like it's leaving it. And when it's leaving it, this is a statement saying, yeah, there's good possibilities for the market prices to be able to continue on higher. 18 average on the single hour term. After the last failed breakout attempt, well, it found support at the lows, attempted to get out for some time, and it looks like so far it's doing so. Now, notice the rate of ascent for the 18 is microscopic. You can barely notice it's going higher, and therefore it's still attempting, of course, to get out of this range, which we can see in here. But we're seeing all the higher lows working really well. And as far as the 50-minute term is concerned, we had this deep correction in here, meaning key high, key low, key high. It didn't have much of a low in here, but this was a little bit of one. But this was a much better correctionary move. But the price action has since gotten above the 18 average of highs and has held and stayed above it for quite some time. And the previous period had a move down to the 18 highs and is lifting off through it past the halfway point with 6 minutes and 29 seconds left. So it does look as we move into Tuesday that the buyer is in control, has a good chance of keeping just that in for the market. Now let's switch it over to the gold market. It's hot. It's popular right now, and gold is well. I'm going to do multiple time frames. One of the things I've been stating is that for the month of June and July, I expect some good gains, meaning good green candle up, and it could be for the month of June. But we'll get to there. We got 15 and 5 other time frames after this, as the market has just continuously been going up, closing this day and entering the new day. Just hanging in there right now. Just like higher highs, higher lows. It's hasn't been yet any major movements to get this down. At some point there will. We got all this gap space, a higher low from this level here is most certainly going to be something that's going to be very important. 4 hour term time frame. This has been an incredible move. You have, how's the story work? And from the breakout pattern in here at this stage, you were in. Okay, let's just go like that. Yep. So at this point here, we were pretty much in retracement mode. As and we're going to see more of this on like the 4 hour and such. But where did we come from in the market? And it was a spectacular move just in here back on May the 30th, which was almost a month ago. And from that spectacular move, it established resistance here. It reattempted to break out, thus in action. establishing resistance or a little higher or retesting it. So we have these three layers hitting this point. When it broke out on June the 13th, it managed to get above that, noticeably above these three resistance layers. And this move of support is easily coming back to where it came from, and then coming in here now establishing more of the strength of the resistance between the high it made and the high it made before prior. And then when it gets up to it, it's a clear breakout. And then great move, intra like just a quick correction that got recovered and still going higher. So from this low, we have a move to here, like a straight up move and a standing up move. And not only that, but the rate of ascent has changed again. It kind of went slower and now faster because this rate of ascent was elevator straight up. And then we can make a rate of ascent that goes towards this level here. But as we can see, the last few periods in here, is changing that as it's now managed to break some resistance lines, most certainly. A new uptrend line is in play because it's gotten above the 18 average in here on this single hour and kept going. So when it got going this morning, so far, there has been no stopping it. And even in here, you see like 4 periods going sideways from the green candle, then starting to retrace higher as we move into a new day. I wouldn't be surprised if this even continues to move up as we move into the next day. Even though the markets are going to be very overextended 4 hour term time frame, most certainly is. But after just congesting and staying within this 18 average, pretty much from this 2 a.m. correction timestamp up until the end in here, it was all like barely going up or grinding higher. That's just such a strong situation to have. And then when it broke that resistance so far, it has just started a good move. And on the daily term time frame, up, straight up move, elevator ride up. Here we had the elevator ride up, a little bit of sideways consolidation. It did so in this case again. It's this little uh, range like that, which is better than going sideways. If and then from the breakout of this, like continuously, 1, 2, 3, 4 consecutive days in a row, and that maybe are we gonna do a fifth? Maybe. Well overextended, and it's gonna have to pull back at some point. But until it doesn't, it's gonna again the buyers in control of this market, getting out above this key Fibonacci level at 1321, as we can see on the weekly. It was choppy-ish, bullish, however you want to call it, just a lot of back and forth, up and down action. But again, getting above this resistance is big deal news. And I'll take a look more of it on the monthly chart, which is where it really comes into play. But it's just so obvious that that's a key level that now that it's up towards here, if it's going to come down, this big area of resistance that we've had since what's been resistance pretty much since at least the end of 2013, start of 2014, is now a level I'm looking for big short-term, mid-term, and long-term areas of support. So finishing this off within the monthly chart. And again, these moves are just fantastic. The setup is in place using the 18 average. I know we can't see too much beforehand, but we can see enough with what we have on here that the 18 average was not in an uptrend in 1998, 1999, and it didn't even attempt to get out until 2001. But we can see that within this attempt in here in 1999, it came back and well really wasn't able to get above in here, and it quickly retraced back. And this attempt, well, it was okay to make a lower high, but make a higher low. No, it made a lower low, and well, all these attempts. And here was an attempt in here on May 1st, but not really. And here's an attempt here, and well, it really started to happen, as we can see at the start of 2002, as it was breaking above $300. That's when it was showing you the 18 average was rolling over, and the market was heading into a bullish territory. And from that point on, the market just kept going higher. When it came down in here, the market held and stayed above the 18 lows. Yes, it went below it, spanning 4 different periods in a row, of course, but that was it. And then when it got up to the 18 highs in the early parts of 2009, it grinded it. I guess you could say it showed strength amongst it. And then when you see it leaving the 18 average of highs, that's the big one again. You see, it was attempting to do so here, didn't do it. Even attempting to do so May of '09, didn't do it. Now it's attempting to do so September, and it did do it. And then the move was fantastic. It was getting above it on like a little over 1,000, and it managed to go up to 1,900. And now, as we've seen before, look at this, the 18 starts to revert. This is by far my favorite indicator. I've been using this for several years, and I have no reason why, no considerable reason I want to change my indicators and how I chart analysis. I just don't see why I would right now. And as we can see now, the market's reversing. So just like before, we want to see this give us indication for when the buyers are going to regain control of the market. And here we are. Okay, so now it's trying to attempt to do so. And at this point, in 2016, because of the fact that it managed to come up here, go sideways, it looked extremely certain in June 2016 it was going to happen. And to say it was time to buy at 1350, I would have been like, yeah, I think it's right. And not all the time when you break out above it and it has this type of setup, it's going to work immediately. This wasn't one of them. Obviously, it's starting to now. But there we go. It has that failed move. But does it hold and stay above the 18 lows? Yes, it does. And then it continues through. It's already established. Now, as this was going on, it majorly established this resistance, attempted and even made that level stronger in the process as 2017 was coming to a conclusion. Again, at the start of 2018, another move lower. So does it hold and stay above the 18 lows? It does again, although this time it had a nice little dip below it, but that was about it. And now we're starting to see it. So at this stage here, this still doesn't say, oh, it's bullish. But here's the interesting thing about trying to find and wait and pick and choose of for a market to switch over. And I already say it's already broken its resistance right now. It's time to buy in that sense because of how it's left the multiple hit resistance. Because there's really two different measures I like to look at. Number one, I want to see like the stage 4, band flatten out, established resistance, come back, break established resistance. Well, it's just broken established resistance, so stage 4 has just happened, bull market. So that's one way of looking at it. But in times when this happens, this thing could just go straight up, and it can be just, oh my goodness, it's just waiting to get going. And going back to the previous level, an example of that would be, okay, so I'm waiting for this to roll to go over, and what happens if, say, on this period, it would have just shot up straight every single day, going up to 675, and never coming back to the 18. These are rare situations that happen. So for myself or anyone, if you're looking to try to find measures like this, you gotta have a strategy for those types of moves. Now, for this, you gotta be fast enough to get in. And technically speaking, okay, well, what was the number to get in? You'd have to think. I was thinking 1400, holding and staying on the 14 number. So when looking at this in here, how is it done in holding and staying on 14? So if anything, maybe the bullish signal was this morning, breaking it above here. This was a long-term entry point. I don't know. That's what I think anyway. Okay, because one thing that's about it, you can be a much long-term trader, but if it's time to get in and out of the market and your signals are there, you got to shorten it out. And this is an example of such. Because long term, it's like, yeah, break this resistance, it's long. Well, it's broken it, it's long. So at what point did you get in? Okay, I'm looking for, like I stated, the 1400. So when looking at this on the hourly time frame, you can see that it came up to 14, it held, and then any of this period in here, basically from this right around in here, I think from here all the way up to here, and is the time where, so this timestamp here and this timestamp here was the one stating, yeah, I like the holding on 14. And then strategy number 2, when a situation like this happens, is okay, now that I see a clear break, I hate getting these expensive prices. I'm confident that it's not going to be a failed breakout. And I'm hoping and confident it's going to have a correctionary move. So I'm going to be looking to buy back. Maybe I'm going to put a buy order in for, say, 1350 and get a little bit of a better price entry point. My reward is if everything's right and gold goes way up and it happens to go down first, I get a better entry point. That's my reward. My risk is if I'm right and it doesn't go back, I don't get any of the gains when this thing rises to 16, 18, and however high it may go. So that's the basis of, do you buy now at the higher price, realizing that if you stop it or you're just going to take the losses, this thing could be pulling back and you could be down an X amount of percentage, realizing that if you're buying on a failed breakout, you're going to be buying pretty much at the highs. Okay, so gold and Bitcoin dominance is continuing to play in. They did through the end of last week. It is starting this week no different. And we'll see how it goes moving forward. Thank you for tuning in and have yourself a great day. Bye bye.